trade breakdown for a trade I took on the Euro US dollar today on Friday, 30th of June 2023. So, of course, starting with the DXY, because DXY is king. I was anticipating a bullish expansion week this week. We've sort of traded into this level of discount and also OTE. DXY has kind of been quite choppy this year, as you can see. If it's more clearer, if you actually go onto the monthly time frame, you can see it's been very sideways, and that's because of, you can see here, look, choppiness compared to last year was quite nice on the DXY, and it's all down to the bonds. You can see here, I know I've got 4 screens here it's basically the bond market but on different time frames. But on this top right corner here we have the monthly time frame, and you can see here that this is also consolidating. So if the bond market's going to consolidate, it kind of has a knock-on effect to the DXY, and you'll get high level resistance liquidity runs. But nevertheless, so going on to the daily time frame, so it's been quite a clear week. We've had, this is Friday here, today's trading, Thursday, Wednesday, this is Tuesday and Monday. So Monday's opened, this has been an inside bar, and then we've then swept the Monday's low on Tuesday into this order block here and fair value gap, and also this is a breaker, and we've then rejected away from it. Obviously Wednesday has respected that order block, and we're now starting to attack buy side liquidity. So it was after seeing this I anticipated that the low of the week for the DXY for this week had been priced in within a logical area, being this daily order block, and then we've now had this bullish expansion towards this previous day's high here, this one here, and this one here. And we've also traded into this daily order block. Also on the weekly for DXY, this was a fair value gap here, so I was anticipating that to get run. So going on to the intraday time frame, I'm going to remove this. Okay, so this setup was, I only trade London now. I've stopped trading New York and London because it was getting a bit of a headache, and I think it's easier to yield consistency if your plan is a bit, more simpler. It was a hard decision to make. I do miss trading New York, but sometimes I just got a little bit too chaotic trading both London and New York. So I decided to switch to trading London. So from now on I only trade in terms of entry models, the London Judas swing and the London continuation. So this trade was a London Judas swing. Well, it was a London Judas swing on the DXY, but Euro US dollar diverted, so it was more of a continuation on EU. But I'm going to class it as a Judas swing because DXY is king over the Euro US dollar. So you can see here, if I just add the lipstick onto the charts, we've got this would have been our previous day's high, that was Thursday's high, and that was my draw on liquidity for the DXY for today. We've also had the Asia range, which would have been here, and draw that on, yeah, and again there. So this was Asia range, so you can see here I was anticipating a bullish expansion day potentially to sweep this previous day's high. We've had this market structure shift on the 15-minute here, which swept Asia range low, and then market structure shift plus displacement. You need the displacement because it shows intent. I don't like to frame setups around, where it's a market structure shift, and yeah, it is a market structure shift, but there's no displacement because the displacement in the candle shows the intent of where the algorithm wants to deliver price to. So after seeing this, all you needed was a simple retracement entry. Now, I did actually take an entry here on the open of this fair value gap, but it kind of, consolidated a bit and then traded lower, and I sort of closed it for a small loss. But then obviously we've traded into these two candles here. That's a breaker block, or you could have had this as well. These two down close candles for bullish displacement. That's a bullish order block. Now obviously I don't trade the DXY. I take all my trades on the euro US dollar. So if we go onto the daily here, obviously basically it's just inversely correlated. This was Monday, this was Tuesday, Wednesday, Thursday and Friday. So for the euro US dollar, my draw on liquidity was this previous week's low. There was a very high chance of that being swept. I couldn't imagine. I couldn't see euro US dollar closing as an inside bar. I just thought that was trading dangerously close to this previous week's low already. We've got this juicy fair value gap here from this wick to that wick, so it was kind of inevitable that euro US dollar would have swept that previous week's low. So that was my draw on liquidity for the euro US dollar. We'll go on to the 15-minute time frame. So we'll draw on our Asia range, so midnight through till 5, and again here. Cool. So as you can see, we did get a market structure shift, which would have been here, but we didn't have the Asia range high swept, unlike how DXY swept its Asia range low. Which it's nice to see it happen on both. I'm not really too bothered as long as it happens on the DXY. That's all that really matters, because DXY is king. So again, market structure shift plus displacement. This was the previous day's low as well, which was also in line with Asia range lows. So that was also another draw on liquidity. Although that kind of got swept before I could catch an entry, but no worries anyway. Because at that point the draw on liquidity for DXY had not been hit, and we still had this previous week's low that needed sweeping on the euro US dollar into that weekly fair value gap. So market structure shift plus displacement, retracement entry. This is where I actually entered my first trade, and then I closed after seeing this. I probably shouldn't have closed it, because we ended up trading into this 15-minute breaker block here, or you could have had this. That would have been these two bullish candles for bearish displacement. That would have been your bearish order block. But for me, I favor breakers. Now I didn't actually enter my trade off of this breaker. I waited for a 5-minute open high low close sell program to be delivered. So if we go down the time frame, and you can see here as well, it's kind of a power of 3. We had this is the kind of an accumulation, and then this here manipulation, and obviously it kind of swept these highs here. That would have been the manipulation, and then here was the distribution. And as ICT says, the manipulation is always sharp and energetic, and the distribution is slow but relentless. So my entry on this trade was, obviously we've respected this 15-minute bearish breaker block. We've then started to displace away from it, and then I got in on a 5-minute open high low close sell program. So my stop was just here. So my stop was still covering this breaker block. We've got this 15-minute fair value gap here, and also this bearish order block. I like to try and cover at least 2 or 3 arrays with my stop loss. And yeah, my entry was just after the close of this 5-minute candle, and my target was here. Now, when I took a partial, I think I took an 80% partial as soon as DXY traded through this or to this previous day's high, I took a big partial because there was a chance that DXY could have swept this previous day's high, and actually that could have been an offset distribution for a reversal. And what you have to think as well is on Friday is usually the day that trades back into the weekly range. And obviously, if you look at the higher time frame narrative of this on the daily time frame, you know, yeah, we've had Monday, Tuesday's created the low of the week, Wednesday, Thursday's expansion, and then obviously Friday has, you know, Friday swept Thursday's high. We're in this bearish daily order block as it is already, and we've also just tagged premium of this range. So you can see here, premium discount. So we've also traded into premium. So that is kind of prime time, you know, reversal profile. So I had to be a bit careful with that, which is why I didn't hold my trades to full volume. In hindsight, I wish I did, because you know, you would have made more money, but you know, that's just hindsight thinking. You have to be content with what the market gives you. So Friday's always a risky day to trade, in my opinion. It's never going to be as favorable as Tuesday, Wednesday and Thursday, which are the days that typically build the expansion of the week. So it's always good to, you know, be content with what the market gives you if you do enter a trade on Friday. And also I suggest splitting your risk. I always split risk as well on Fridays. So yeah, that was that trade. I hope you enjoyed the video, and I will see you in the next one.